So I've been scalping Forex for the past month, and it's been going pretty well overall. I've scalped Forex at multiple different times during my trading career, but I've always returned to swing trading for reasons which I really can't justify anymore. I've always thought that swing trading had a quote unquote higher win rate. I've always thought that swing trading was where there was more stability, more security. You can see things unfold step by step and you're not rushed. But trading these lower time frames the past month has got me to realize that a lot of that is just a story I was telling myself that wasn't necessarily true. Now, you may be somebody who likes to trade lower time frames. I trade multiple markets. Forex is the main market I trade. And I'm Nick, by the way. You can go watch other videos on my channel if you want to get to know me. But I've been trading for almost a decade. And believe me, I've tried everything. I've tried so many different things. Even smart money institutional order block, liquidity, Wagyu beef, Kobe steak, bullish institutional candlestick trading strategies. And what I have learned is that a lot of the stories that we tell ourselves whenever we're looking at a chart and asking ourselves if we think price is going to go up or down is truly just fabricated. They're fabricated fallacies that are often like they hinge on a series of abstractions that just lead us in one direction, that make us convinced like in a superstitious way that something is true or something's not true. Trading these lower time frames for the past month has got me to realize that a lot of the stuff that I've thought for years is actually at best just not true. And at worst, it was detrimental to my trading journey because I could have been doing this the whole time along with swing trades as well. So I'm going to show you here in this video. So let's go ahead and get into it. Also, if you're not in my free Telegram channel, you should join my free Telegram channel. I share all my analysis and stuff in here almost every day. Analysis of trades that like I'm looking to take. Recaps of trades that I have taken. I show everything in here. I show the results and stuff like that. So if you just want to follow what I post in here, it's a lot of helpful content. It'll really help you. I try to keep it real simple so that way it's not overwhelming. Simple charts, simple messages, simple things like that. You can join with the first link in the description, and that will allow you to kind of follow along every day. And I think it's a really valuable resource for anybody wanting to just kind of get more experience trading more quickly. So scalping, like, where do we even begin? To be honest, I actually begin on the higher time frames. And by higher time frames, I mean like 1 hour. I don't look at daily or 4 hour, but 1 hour, I would call that a higher time frame if you're doing something like scalping. So here we're on USDJPY. I'm just going to use the replay mode. We're going to take it back to somewhere random. Let's just go to a random bar. I'm going to show you what I do. So this is almost a year ago. It's April 2nd. So what we'll do is we'll go back to the 1 hour and I'll show you how I do this. So here's what I do. I start on the 1 hour and I just draw areas where I think price might bounce at. So if I'm looking at this chart right here and I think price might go up here, maybe it'll bounce at this resistance zone, right? So it might bounce up there. And then what if it goes down, right? Of course, leaving aside the fact that it could bounce right here where it's currently at because it's at what looks to be a support zone. If it doesn't bounce there, it could come all the way down there and then it could bounce here. Okay, so the trading idea just begins right here in general. So then what I'll do is I'll just mark up some zones that are close to current price of where I think it might be likely that price might bounce at. There's no exact science to this. There's no exact thickness or thinness that the zone needs to be. I just try to draw them in such a way where I can encapsulate most of price action. You could even draw them like this where it's encapsulating these and you're kind of going for the extremes down here. That's certainly fine. I'm going to use where most of the price touches are just because it seems to be more relevant. So there's that. So anyway, here on the 1 hour is like there's, could go up and it could go down, genius. So then what I'll do is I'll go to the minute 15. So on the minute 15, I'll essentially just watch price action and then wait until I feel like it's going up or down. Now this is a moment here in the video where I'm sure there's a lot of you thinking to yourself, time out. Everything was all fine and dandy, right? We drew some support resistance zones. Price could bounce. We're going to wait for them to get to them. And then all of a sudden, this guy says, he just waits till he feels like price is going to go up or down. Well, a real big thing that a lot of people who are especially new to trading or not yet profitable don't realize the concept of is the fact that trading is extremely nuanced and subjective. It really is an art. It's a skill set that you develop where you have enough discretion, enough intuition, enough discernment of the price action to be able to have that quote unquote feeling of what you think is going to happen. Now, this is distinct from using an automated trading approach in which you have black and white rules that are pre-programmed into some type of algorithm that then executes a trading strategy using the exact same objectively defined parameters every single time. You can't do that whenever you're trading manual trading, nor does it even work really well, in my opinion, because of our interpretation of everything. I may see a resistance zone, and you may look at that and say, that's not a resistance zone. The next one further up, that's the resistance zone. And then my opinion's as good as yours, unless one of us has more experience than the other and has like better stats or is more profitable or something like that. But when it comes down to actually manual trading, your discretion, your intuition, your judgment is what is going to make you profitable. And it's all subjective. So it may sound really crazy to hear someone say things like, oh yeah, I'm going to buy when I feel like it's, ready to bounce or feel like it's going up. But that truly is like the whole trading approach, right? It's like get some parameters in place for if I think price will go up or down. And I just use support resistance usually because it's a very simple way to start to get kind of a framework around what you think will happen. And then I wait for price to get there. And then if I think it's going to bounce, cool, I'll buy if it's a support. And if I think it'll break the support zone, then I'll oftentimes sell at support with a stop just above and a target below if I think it's going to go there. Now, think about it this way. If you randomly buy and sell on the chart and you use a 1-to-1 risk reward ratio, right? You are roughly going to break even given a large enough set of trades. You'll actually end up slightly down with like commissions and swaps and spreads and stuff. But roughly speaking, you'll end up pretty much like near break even because half the time it'll go to the take profit and half the time it'll go to the stop. And this is true regardless of which risk reward you use, right? You can use 1 to 2. You may be winning trades twice as much, but whenever you lose, you may be losing trades twice as much, but whenever you win, which you will win, that 2 units of gain, the wins will just roughly speaking wipe out the loss. And so there's no real way to get around it with like mathematics. What you really have to do is you have to focus on being able to see things subconsciously that your brain recognizes, that it puts dozens of things together all at the same time. And then it just generates this response like a genie in a bottle, like ChatGPT. And it just says, this looks like a good buy. Now, I know that sounds so hazy, so nebulous, so misty, so foggy. Like, what the hell does that even mean? It sounds like smoke and mirrors. The main thing here to recognize is that trading is not a science, right? Because if it was a science, then you could do the same thing every single time and the trade would work every single time. You'd win every single trade. You'd be a billionaire within 1 week. But unfortunately, that's not the case. You could do everything quote unquote right or everything quote unquote correctly as it relates to your trading approach, and you're still going to lose, right? You may lose 10% of the time. You may lose 40% of the time. It doesn't matter. But as long as you can win just a little bit more than you lose, that is what makes a profitable trading approach. And again, the method by which you get there is by using discretion and intuition. So what do I do here on the chart? Like I said, I'm just waiting for if I feel like it'll go up or down. I feel like this is going to break. So what I would do here is, I'm on the minute 15 chart, is I would sell with a stop above that high and then a target here at 1-to-1. Because remember, if you have a 1-to-1 risk reward ratio, as long as your win rate is just slightly above 50%, it really needs to be like 55% or higher to cover swaps, commissions, fees, spreads, things like that. But if say you have a 60% win rate, right? You take 10 trades, roughly speaking, if you've got a whole data set of hundreds of trades, roughly speaking, after every 10 trades, you're going to make 2 units of gain. Why? It's because if you win 6 out of those 10 trades, 60% win rate, you make 6 units of profit. If we're risking $1,000 per trade, this is $6,000. You subtract $4,000 from that and you're left with $2,000 of profit. So roughly speaking, every 10 trades, you can generate about $2,000 of profit if you have a 60% win rate and you are using a 1-to-1 risk reward ratio and you're letting it hit stop or target. If all those statements are true, then yeah, net of fees and commissions and swaps and spreads, yeah, you're going to make about like $2,000 for every 10 trades if you're risking $1,000 per trade. Where this gets interesting is the fact that you can dynamically manage these as well. So keeping the subjectivity in mind, I'm just going to tell you why I think this is going to go down. So price has gone up here. We've gone to like what appears to be a kind of a major resistance zone. And price fell away from it. Then it bounced here at support, tried to get above it again, failed, came back here, tried to go again, but then made a lower high, right? Made a set of lower highs. Now we've come down again, and then we tried to break, but now we've come back up, and we've got a couple bearish wicks, right? It's putting the totality of the circumstances together to generate a trading idea and then letting your intuition guide you as to whatever that is. So Just going to let this play out. I'm going to let it hit stop or hit target. What I will normally do whenever I'm actually like live trading is I will take it, I will manually like manage the trade. So why is this going for 10 seconds? Okay. Normally what I'll do is if I don't think it's going to work out, I'll manually like exit. I guess TradingView got new tick data because now it's actually, you know, taking forever for this to work. Update interval. Let's do it every hour. There we go. Now we can have it actually run to the target or the stop. So this one runs to the stop. Now, could I have managed this? You know, maybe. It's all coulda, shoulda, woulda. What matters is what you do in real time. That's why I trade live. I have a group called the MFX Nicks Trades group where I call all my scalp trades every single day. And they don't usually take seconds or minutes. They usually take a few hours to play out. So a lot of people follow those trades. There's a link in the description if you want to follow my trades live. But for modeling it and backtesting purposes, just to show you the stats, like this, the price goes up and then it hits the stop. And then what you saw right here is you saw price fail to get past these lows. So, you know, there's a chance maybe in reality, if I was watching this in real time, I could have been like, I don't know if this is going to work out. It's not really breaking the lows. It's having a lot of bullish wicks. Let me scratch out here around break even. But, you know, again, we're going to keep it just stop loss or take profit for the sake of this. So another one up here is price came up here to this resistance zone and then started to reject. So this was a resistance zone we'd already drawn. I had clicked too fast on the replay tool, but let's just say that, you know, we enter a sell after, let's just say it's a bad entry and it's after it's already started to fall and it's like, you know, already fallen here, right? So then we'll put a stop above here. We'll put a target down here at a 1-to-1 risk to reward ratio. So then you'll have another one work out. So with like a 60% win rate, you're going to be winning and losing all the time, right? Because like roughly speaking, that's so close to 50 that you just all the time you're going to have win, loss, win, loss. You might have 3 losses in a row and 3 wins in a row, 4 losses in a row, 4 wins in a row. I went on a losing streak this week, right? 6 losses in a row. And then like today I'm back on a win streak. I've won the first 2 trades I've taken today. And there's going to be plenty more opportunities as the rest of this week continues by. But like the actual sort of the statistical volatility of your results will dictate that you're going to have multiple losing trades in a row, multiple winning trades in a row, and you'll also oftentimes just alternate between a win and loss. The key here is that long term, you just win a few more than you lose. That's it, right? So if you just have a 60% win rate, all you have to do is just kind of tune up the numbers, right? Say you have a $50,000 trading account and you're risking, let's just say $1,000 per trade, right? This is 2% per trade. Some point you're going to hit a losing streak where you lose 5 trades in a row, right? And now you're down 10%. So you're down $5,000 on that 50K account. But you're also going to have periods of time where you win like 5 or 6 trades in a row. And then whenever you win 5 or 6 trades in a row, you're growing your account more than 10% during those periods. What your account will look like is it will be a very kind of like rocky but steady growth curve up and to the right. But if you're watching this video, like that would be up and to the right that way. So yeah, you get the point. So with that, you're going to win and lose trades all the time. So let's see if we can figure out what this is doing. So price comes there to the support. Let's update this let's do every 30 minutes. That way it doesn't go too fast. Because if it goes too fast, then I can't pause it in time. So price broke through this level. Now it might come back up and retest it as resistance, and then it might bounce. So what I'll do here is I'll just sell at resistance here. And again, you never know what's going to happen. I'm going to just drag that from here to here. Again, you never know what'll happen, but of course that's not the goal. The goal, if you're scalping, is just to, you know, buy when you think it's going up, sell when you think it's going to go down. And if you use a 1-to-1, you're just right a little more than half the time, which you'll get with experience. I think most people need at least 6 to 12 months of experience before being able to do this in kind of a more predictable and consistent way. But even then, like 90% of people fail. Trading is super risky. Most traders lose money. You know, I'm not a financial advisor. I can't guarantee you anything. these past performance of how I've done, and also in the backtesting thing, it can't guarantee future results. Like nothing's guaranteed. But with all this being said, if you can wrap your mind around like those risk tolerances and be able to accept them and say, yeah, okay, I'll still give it a shot. You just have to understand like the skew between wins and losses is just going to be so big. So yeah, so we'll play this out, see what happens. And if it breaks back above, then we can just buy there at the support. So it breaks above. Now we can wait for it to go deeper into the resistance zone to just sell again. So I'm going to go ahead and sell right there. We'll have a tight take profit, tight stop just above the resistance zone. Just looking for that little like inch below. Looking for a little bit of a tumble. This looks like it's going to go up in my opinion. Yeah, so at this point I'd probably be like buying. I'd probably be closing the short position and then looking to buy. But again, we'll just let it play out because I want to show you guys the stats. So it narrowly misses the target. It ended up doing what I thought it would, which was going up. So now what you'll see, so you'll see the first losing streak, right? A losing streak is just more when you lose more than one trade in a row. So we won one, we lost one. It was break even. Now we've lost two, right? So now we're down 2 units of risk. A lot of people, whenever they go through losing streaks, they don't understand the fact that, for one, it's completely normal. But number two, even worse, a lot of people will, the moment they go through a losing streak, they'll start modifying a bunch of stuff and changing a bunch of stuff and start thinking that the trading strategy doesn't work or whatever. Y'all, like professional banks and hedge funds and floor traders go through like 2 to 3 down months per year, right? Like I myself have 3, 4, 5 break even / losing months per year. And this is just a normal part of trading. The whole goal is just to make a little more than you lose long term. And if you do have a statistical edge, whether that's predictive or whether you're just, you're letting your winners run, you're cutting your losses short, whatever that may be, you have to let that play out over a large enough set of trades. So many people, especially whenever they're new to trading, they lose 2, 3, 4, 5 trades in a row, and they immediately think like, well, this shouldn't be happening. Like this is just clearly not a good trading approach, and this is horrible. And I was risking 20% per trade, and now I've lost 5 trades and I've blown the account. If once you know what the parameters and the risks are, after you do a bunch of testing, after you get a bunch of experience on a demo account, after you've seen stuff like this happen over and over and over again for months, and in my opinion, at least a year, then you'll be able to kind of say, okay, I know every now and then I'm going to get like a 5 trade losing streak. So what do I have to do? I have to not risk more than I'm comfortable losing. So that might be 1%, 2%, 3%. It's all up to you. If you're risking 3% per trade and you lose 5 trades in a row, you lose 15% of the account. But you're also likely at some point going to randomly win 5 trades in a row. I won 5 trades in a row earlier last month. All of them just happened to win all in a row, right? That's just going to happen. It's just a statistical probability. It'll happen at some point. So you win 5 trades in a row, and if you're risking 3% per trade, you're going to make 15% gain in just that win streak alone. So it has to be something that you're comfortable risking per trade if you're using stop losses, and if you have slightly above 50% win rate. You need to account for the fact there's going to be losing streaks. Because if you don't, then you will be going crazy and you will feel sad inside. So we had price kind of stop right here. We're on the 1 hour. I'm going to play this forward just a bit more. So now I've gone to the 15-minute. So this was a trade I took today on USD JPY, not this exact one, but a similar setup where it started just making lower highs and going down. And it works today. But, it might not work here. So we're going to find out. This looks like it's going to go down. I like the fact that it's had a huge run up. Came back, tried to go up, tried to pull back, and then continued to make a higher high. And it's kind of failed, and it's kind of dwindling out. I'm going to put a stop not only above all these recent highs that were just formed, but also above this little, what seems to be a support resistance zone. And target just goes at a 1 to 2. Sorry, not a 1 to 2. a 1-to-1 risk to reward ratio. So this one stops out. So now you have a 3-trade losing streak. What I'm also going to do is, since we're here at resistance, I'm going to sell again. And if it bounces here, cool. If not, then I will wait for it to make a higher high and then wait until it looks like it's about to reverse. And then I'll trade that higher high. I'm also going to remove this resistance since this looks like price isn't really paying much attention to it. So price went hit the target. So now the losing streak is over. So that was 3 trades, right? You're going to lose. There's going to be a lot more trades in a row that you lose if your win rate is anything close to 50. Like if your win rate's like 60, even 65%, it's just a regular statistical occurrence. That if you take like 100 trades, 200 trades, 500 trades, at some point you're going to have like 5, 6, 7 losses in a row. And that sounds really crazy. And that is kind of really crazy, you know, when you think about it. But like a perfectly functioning system, you could take a bunch of trades in short succession and you have a losing streak. When scalping though, here's the difference between like swing trading versus scalping is when you're scalping, this just happens quicker, right? So like say like you're swing trading and you might get 1 really good trade a week. You know, let's just say 2 good trades a week, right? So that's about 8 trades a month. 2 trades per week times 4 weeks, about 8 trades a month. So let's say you go on a losing streak, right? You lose 4 trades in a row. So you lose 4 trades in a row, and then you win 2 trades, and then you lose 1, and then you win the next one. So like net, you're going to be down on that month, right? You're going to end up a couple units of R down. But whenever you're doing that with swing trading, that took you the whole month, right? What about whenever you're scalping, right? You're looking at all these different pairs. I just trade USD JPY and Euro USD right now because they seem to work the best for scalping in my time zone when I wake up around 7 a.m. Central Standard Time here in beautiful Texas. It's freezing cold here right now. But when I wake up and I trade, I just look at EU and UJ. And whenever I'm trading them, I get usually on average like about 2 trades per day right now. Sometimes it's more. Sometimes it might be less. Sometimes I might not take any trades, right? But it averages out to be roughly like 2 trades a day. And so you have a week, right, where like perhaps I will take, let's say, maybe around 10 trades. If I have a losing streak for that week, right, I could lose like the first week 4 trades in a row, or like this week where I've lost like 6 trades in a row before now being back on a win streak. I can lose multiple trades in a row, but instead of it taking a whole month to play out, it only takes a few days, right? So it'll take a few days, then I'll be back on a win streak and everything will be fine. So it may take like 30 days if you're on a swing trading for your losing streak to end and you start getting on a win streak. If you're scalping and you're taking a lot of trading opportunities per day and your stats remain roughly the same, then what that might be is it might actually just be like, you know, only 3 trades instead of 30 trades. Or sorry, 3 days time instead of 30 days time to wait for the losing streak to end. Psychologically, I just feel like this is like a little bit better, to be honest. Like, because imagine you like going through a whole month, you're having to be patient, you're exercising your judgment, you're waiting, you've done it perfectly executed every time, and you lose 4 trades in a row, doing everything literally as close to perfect as you could possibly say from a subjective point of view. When you're doing this scalping, you don't really care when you get losing streaks because you're like, dude, I get so many trades. Like I'm going to win a couple, like obviously, even if it's just random chance, not even factoring in the win rate that's above 50%. But on top of that, not only will you win random chance trades just because, but also there will be statistical periods of time where you just win 5 trades in a row for no reason, right? And then you're not going to complain about that. But for some reason, people will complain about losing multiple trades in a row, but they'll never complain about winning multiple trades in a row. It's just the way human psychology works, right? We have loss aversion. We have fear. We don't want to lose. We get scared. We get upset. We get very risk averse, and we don't want to like risk a lot. So then we start not taking trades that perfectly align with the trading approach, even though there's no logical reason to do so, right? You lost 3 trades in a row, so you're like, oh, I'm not going to take this 4th one today. I'm just going to stop trading for the day, and then that would have ended up working out. And there's another trade you could have taken, and then that one would have worked out, but you didn't take it. So now you've lost 2 trades. You could have taken another 2 trades, and then that would have broken even on the day for you. So you could have just scratched at break even. Now you got a fresh day tomorrow. But instead you don't take the trades because you're like worried and you're like, I'm on a losing streak. I've lost 2, 3, 4, 5 trades in a row. I can't take the next one. I need a break from trading. I need to step away from the charts. I need to do this. This is all just human psychology and superstition, right? When you lose multiple trades in a row, even though the statistical likelihood of you winning the next trade starts to become very, very high, your brain will tell you, no. The likelihood of losing the next trade is really, really low, right? and this doesn't happen for everyone, right? Everyone's different. You may think like, no, I've lost 4 trades. The likelihood of winning is going to be, very high. But what I'm saying is most people, like from an actuarial standpoint and what actually happens is this fear of loss, this risk aversion kicks in. And then on a losing streak, people will just be like, I'm not going to take this next trade. I don't know. I know I've lost 3 and I know I've lost 4 trades in a row, whatever. This next one looks fine, but I don't know. I feel kind of weird. I feel like it's going to lose because I'm on a losing streak. And then the next trade is more likely to lose. You start thinking all these really weird, superstitious things. Instead of just accepting like, dude, like whatever, like we're going to win, we're going to lose, we're going to win, we're going to lose. Sometimes we'll win a bunch of trades in a row. Sometimes we'll lose a bunch of trades in a row. You can't look at all your data until you have like at least like the bare minimum 100 trades. Then you look at 100 trades and you can try to find out win rate and statistics and average losing streaks and win streaks and stuff like that. Even better if you got like 250 to 500 trades. That's really where you'll start to see an edge start to show, in my very humble opinion, if you're doing this manually. You can't do this in backtesting. It won't work in backtesting. You've seen here in backtesting, there's multiple trades where I would have like closed early and flipped and done the other opposite. But it's hard to do that in backtesting because like it requires you playing a lot of mental gymnastics and being very fluid and dynamic. And you're not always going to be able to do that and replicate that in real trading, which is why I just recommend trade the live market on a demo account. So that way you just get the experience seeing this happen over and over again. And it doesn't really take a lot of time. This is the 15-minute chart. The 15-minute chart, I mean, each one of these candles are 15 minutes. The trades don't take long. This was April 10th, 21 to April 11th one. So this one took like a few hours. This one, same thing, took a few hours from 2 p.m. to like 8 p.m. This took 6 hours. It doesn't take that long. Swing trading, you can sometimes be in a trade. There was a trade I was in for like a month and a half that I lost like 30 grand on last year. And, there's other trades where I'm in for like a week, right? And I make like 5 grand or 10 grand. And so when you're scalping, that's one of the differences between scalping and swing trading is you don't have to sit there forever while trades play out, right? Trades just typically play out much quicker and you get more trading opportunities. So you can start seeing the stats and the edge play out just more quickly in terms of time duration than the opposite. So I think this is going to break through the zone. So this is going to be one of those trades where I buy at resistance, in this case, buy above resistance. And I'm going to treat it like just like a break and retest trade, right? Even though it didn't really retest. The idea here is that if this was going to bounce at the zone, then the trade would look like this, right? There's an entry, a stop above, target below, and if it bounces, you make a profit. If it breaks above the zone, you imagine for a second it breaks above, then it comes back and tests and starts to bounce. Well, then you would just put like, your entry there on the retest, or maybe it's a little bit higher, and your stop below and your target above. You can still do this if you think price is just going to break out. You can literally buy at resistance and sell at support. And then you can just, as long as your stop is on the other side of the zone of invalidation, then like the trading idea is fine. Because keep in mind, this could go up here, it could go up a little bit more, then it could fall back and then touch it. And then if it touches the zone, you don't want to get stopped out because it's still a valid trade. But if it goes that far below the zone and it breaks the zone, that's an area where I'd say the trading idea is invalidated. So I would, not take it there. So this one stops out. This is one of those ones where dynamic management could have come in it's super helpful, right? Because if price just comes back and touches the zone, but then it starts just going sideways and it's failing to make new highs, you can scratch that out at like break even or like a partial loss or something. But again, for the sake of stats, we're just going to do it anyway. So I think this is still going to go up. So I'm going to just buy again here. And the stop is just under that recent low right there. And the target is up here. If it spikes up, it'll go to the target. So now back on another losing streak. So check this out. There's been 2 trades that lost. So now we're down I think there's 3, 1, 2, 3. These cancel out 4R. So it's down 4 units of loss so far, right? So what's the statistical, again, we lost 3 trades in a row. That was the worst losing streak. Now we're on a 2-trade losing streak, but we haven't seen a win streak yet, right? We haven't seen a streak where we win multiple trades in a row, like 2, 3, 4, 5 trades in a row. Even if you have a 50% win rate, that's going to happen at some point, right? again, you have to trade through moments like these where net right now in this current little backtest simulation thing, it's down 4R, right? A lot of people, they're like, man, like if this was working, it should be working by now. Again, you have to give it so many trades for things to play out. So price comes down here, bounces. This sounds crazy, but like I'm going to buy again because I still think it's going to go up long term. I'm just going to adjust some stuff a little bit here. I'm going to adjust the stop below that low. And the target needs to be at least 1-to-1 to make risk reward viable. So I'll buy here. And then if it goes and hits the target, then I'm going to look to sell now that we've made a higher high. So that hits the target. So the 2-trade losing streak is over. Now we've won. Now let's see. What I'm going to do is I'm going to be looking to sell. Right here looks good to me. So I'm going to be selling right here. If this spikes up here again, what I'll likely do is just re-enter the trade and then take it short again. Because this right here, this might be kind of a tight invalidation. But again, if we're scalping, like we're not trying to be a hero here, shoot for the stars. You're scalping. Like you're not taking that much movement. Yeah, I distanced the stop out a little bit. Let's see if it hits the stop. So it hits the stop, goes up here again. I'm going to do exactly what I said, which was to get back into the short position, just because usually after price makes a new high, you'll see a sell-off. I'm going to distance this out just a little bit to account for the volatility because there's been a lot of volatility here. So that one wins. So now we're in this little pattern of like, this was 4R down and then plus. So now it was minus 3R. Now it's minus 4R. Now we've won this, so it's minus 3R. So we're still down 3 units of risk. Now let's count how many trades we've actually taken here, right? So we've taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So only 11 trades, and we're sitting down 3R, right? That's I want to say close to break even, but I won't say that because I think we'd need more, maybe like 100 trades. And if we were down 3R, that would be pretty much a break even trading approach with about a 50% win rate, most likely, net of fees and commissions. But with 11 trades, you're not going to know that, right? Another important thing to consider is that look at how long the losing streaks last. Like even this losing streak of these 3 trades, this lasted from the 4th of April at 10 p.m. What happened here? 4th, 5th, 6th, 7th. So, okay, so this was a weekend. And that was the end of the day. So this is pretty much like almost the 5th of April. So the 5th to right here, which is the 10th of April. So minus the weekend. So that's like 3.5 trading days, 3 or 4 trading days. That was it. Then the losing streak was over. Then there was a win. So oftentimes what you have to do is, whenever you're swing trading, the 3-trade losing streak could take like 2, 3, 4 weeks, right? But if you're scalping the lower time frames, then it just generally doesn't take that long. I still think this is going to go down. So I'm just going to do it. I'm going to get short again. I'm going to distance the stop out just a little bit. If it's going to have a move down, it's probably going to extend a lot further. So we'll see. And this gives it room in case it goes up here. So it goes up here, stops out. I'm going to flip the bias to long because now we're just kind of channeling up. Generally, if price drops, you'll see like a quick spike and then followed by a quick move back the other way. When price keeps pressing into new highs, we could obviously see like a ridiculous huge drop at any moment. But in general, whenever it's something like this looks just to be an uptrend stampeding upwards. So, it is what it is. I'm putting my stop so close here just because you could see like all the higher highs and higher lows that are all kind of playing out. The stop doesn't need to be like all the way down here, right? Because if this is going to work, it's going to work out relatively quickly. If it's not going to work, right, then it's just going to swing down here and stop out. If it swings down here, I'll reanalyze. I might re-enter. And if it just keeps tanking downwards, well, that's what the stop is for. back on another 2-trade losing streak. So let's see what will happen now. So do I think this is going to continue up? We kind of went up, we went sideways. We did not break from there. Instead, we fell back to the downside. So I think now we might have a continuation back to the downside. So I'm going to get short here. Now that we broke the recent lows, and then it's tried to go up a couple times and pull back, but it hasn't. It didn't work out. Instead, it's just kind of fizzling out sideways. So I'm going to short right here. That hits the profit target. So now the losing streak is over. There's been 2 losing trades, and there's 1 winning trade. Now let's just keep on trading through it, and then we'll run this out a couple more trades, and then we'll look at some of the stats, and I'll tell you some important things to consider whenever you're scalping. So this rate, it's already started to go. Damn it. So this is a resistance zone right here, and it came in, it was stalling out. What I'm going to do is I'm going to get short up here at the resistance zone. I'll put the tool a little bit lower since it already started moving. And then I'll also distance out this stop a little bit, and this target distance just a little bit down here. But yeah, I didn't pause that in time. This is one of those hindsight is like 2020 trades. So then it has a big move to the downside. So now we've won these 2 trades in a row. So let's keep on clicking through here, take a few more trades, then we'll talk about the results. I think this is going to break through above. We saw how well this last breakout trade worked, but we're going to do it again, right? Maybe we haven't learned our lesson. Stop below, target up here. Again, this is all just subjective intuition. Your reasons for taking trades really don't matter. What's going to matter is whether or not you have experience to justify the use of those decisions. If you don't have experience, then it's kind of hard for you to justify using discretion when your discretion is probably no better than random chance if you're just getting into trading. This would be a trade I'd probably close at break even if I was trading normally and dynamically. But instead, that one, so it hits the profit target there. So this is a 3-trade win streak now. So we finally got a win streak. Now let's, we'll sell right here. I think since it made a higher high, it's probably going to have a reversion to the downside. I'll tighten up the stop just a little bit, and then we'll let this play out. So this one stopped out. I'm going to re-enter right here. This just looks good to me. This looks like a nice little mean reversion type of trade. I'll take all sorts of trades. I'll take trend trades. I'll take mean reversion trades. I'll take, bounces of support resistance, reversals, breakouts, all sorts of stuff. So this one stopped out. It went up. Let's, what the hell was this? April 26th. I don't know what happened here. This looks like it was a major news event. There are some news events that I'll kind of sit out of and kind of like wait a little bit until they pass, just because some of them that are really high impact and super volatile, they will really confound the variables of your trading approach. And if they are really volatile, even if you're right, like this happened to me yesterday, I was right about a trade, but it's pinned down and spiked me out to the exact pip with the spread. And then it just rocketed into where the take profit was, right? So had my stop been just a little bit lower, then like I would have been able to have profited from that. So this one loses. I'm going to re-enter the same exact trade up here. This is just really high. We're probably going to see a big reversion at some point. So now look at this, a 4-trade losing streak. And that was right after a 3-trade win streak. So you have to remember that the total number of wins and losses are all going to conglomerate together, and you're going to have periods where you're winning multiple trades in a row and losing multiple trades in a row. So now what I'm going to do is I'm going to short again. I know this looks crazy, but again, like stuff like this is such an anomaly. It rarely ever happens. And when it does happen, there's usually a reversion since it's Forex, and Forex is a really steady state mean reverting market. So that one works out. I actually remember when this happened last year. I was shorting here and I was waiting, and then finally it ended up turning around, but it turned around right as I closed everything. Yeah, I remember this happening last year. So now let's see. So I still think it's going to go down from here. I can't remember what happened right after this, but I do remember this huge spike after it just kept pressing up forever. Let's see. I remember literally all of this. I remember that going slow like that. I remember like nobody knew what to do because we're like, man, the charts are broken. Like everything's going sideways. I can't believe this was already in April of last year. I've been trading for too long. Okay, so now I think it's gonna fall. So what I'll do is I'll get short here. Stop above the recent high, and then a target down here. So that drops. So now let's see what happens. It's retesting a support resistance zone. Looks like it's going to break above. There was so much volatility when all this was going on. I'm going to get short again in here. The stop above this high. And a target down here. And I do think this is going to continue past the low. It's just a matter of getting an entry. So let me just watch what price action does. Yeah, I think that's gonna, let's see. I'm gonna go ahead and get short here again, just because of the momentum. This is, you see me take trend trades. You see me take trend trades, reversal trades. It's all sorts of different stuff. So now you see it's a 4-trade win streak, right? So there was this losing streak, which was 1, 2, 3, 4 trades, and the next 4 trades win, and it goes back and forth. So all of this is just to justify my concept. We're obviously not going to be doing like 100 trades here today, but all of this is just to justify the concept that when you're scalping and when you're swing trading, you're going to have periods of time where multiple trades in a row lose and multiple trades in a row win. And again, this is true even if you have no edge whatsoever, right? We would have to let a lot of trades play out to have anyone prove what their edge is, because you making those decisions in real time, you doing dynamic things like closing early at break even or closing halfway to the target or halfway to the stop. All those things matter such that they will influence your profitability in a very profound way because you're using your discretion and making those intuitive kind of decisions that only you can make based off your subconscious judgment and an accumulation of all your experience. So what you've just seen is you've seen scalping how even with the losing streaks, right, they're generally short-lived. It's like the worst one we saw was like a couple days, right, where it maybe takes like a couple days to maybe even a week. But that's just counting this one pair on this one set of trades. This is not counting say you were trading this is USD/JPY. Say you were trading Euro USD at the same time and you had won 2 trades during that time, right? So now you're not on a losing streak because you may have lost 4 trades in a row on UJ specifically, but if you've won 2 trades on EU, well, you're only down 2R, right? You lost 4, but you've won 2, so you're only down 2R, and those could happen within each other, right? You lose the 2 trades on UJ, win a trade on EU, lose 2 trades on UJ, then win another trade on EU. Then now you're losing streaks for only 2 trades in a row instead of 4 trades in a row. All this stuff is going to come together. What I want you to focus on as you continue through your trading journey is to remember that whenever you're losing multiple trades in a row, it doesn't mean there's anything wrong, right? If you're worried about it, it's probably just because you're risking a little bit too much per trade. Just tone the number down. So that way, when you lose multiple trades in a row, it has so little effect on you that you're just yeah, it's whatever. I'll just keep taking the next trade. People will think you're insane, right? There's probably a time here where, there's some of you thinking why is he still shorting the uptrend? He shorted 4 times in a row, right? I don't understand why he would keep doing that. And then right after that, I go on a 4 trade win streak, right? And if you continue to extrapolate this out into the future, what you would see is I'd win trades all the time, lose trades all the time, win multiple trades in a row, lose multiple trades in a row. But what you would start to see is given enough trades, you would start to see that P&L factor play out. For me, my win rate sits anywhere between like 60 and 70%. After the trades this week, my win rate is probably closer to 60% now. But whenever you're taking multiple trades and like having different trades on different pairs and stuff, just keep in mind you're going to win multiple in a row and you're going to lose multiple in a row. So I hope this video was useful to you. Make sure you're joining my free Telegram channel if you're not there yet. If you made it here to the end of the video, what we normally do is like I give you like a number, right? And what you do is you take the number that I give you and then you work it into your comment creatively, the comment that you leave underneath this video. You can like the video if you want to, and then when you comment, leave like the number like in the video. So for this one, we're gonna make it real creative here. 1, 2, 3. So as long as you work the numbers 1, 2, 3 into your comment in some creative way, what I do is that tells me that the person watched all the way till the end of the video. And so if you watch till the end of the video, I want to engage with you. I want to see your comment. I want to read what you wrote and respond to it if there's anything I can help with. I don't always respond to all comments, but if it's something I think I can help with or it's a question I think I can answer, then you leave like 1, 2, 3 somewhere in your comment, and that will let me know you made it to the end of the video. So I'm not talking to people that just watched the first 5 minutes, left the comment, and clicked off. Like I wanna really engage with those of you who are like my ideal type of people that I want to work with, which are the ones that kind of watch all my videos and take everything and then use a lot of thought to put into their comments and stuff like that. Those are really fun to read, and it's also real organic and real creative and real nurturing. I don't know. I just really like it a lot. So yeah, work in the numbers 1, 2, 3 to your comment and leave it below, and I'll probably respond to you or react to it or something like that. Hope you enjoyed this video, and I'll see you in the next one, my friend. Happy trading.